Hey guys, welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 161, recorded here on April 6th, 2025. This podcast is for entertainment only and is not investing advice, so please do your own homework. We're at block 891223, Moscow time 12:33. Fees are 1, 1, and 1 as we record. We'll start with the market news update outlook. Get into the weekly top Bitcoin news. Lots to cover. It was a crazy week. And of course, Sunday night is looking pretty pretty bleak for the market on Monday. So we'll see. But lots to talk about there. We'll check out this week's featured post on the Bitcoin Fortress Substack, take a look ahead, and then wrap it up. So let's jump right in with the market news. It was a historic week for Wall Street, but not in a good way. President Donald Trump's sweeping reciprocal tariffs announcement on, quote, Liberation Day resulted in the biggest rout in U.S. stocks since the market crash of COVID-19 in 2020. Ouch. The imposition of the steepest American trade barriers in over a century has hammered sentiment across the globe. U.S. growth expectations have rapidly soured, and recession odds have spiked. Traders were caught off guard by the extent of Trump's tariffs and responded by moving out of equities and into safe havens such as the dollar and bonds. Editors note those are not safe. The benchmark S&P 500 index cratered more than 9% this week alone and now sits deep in correction territory after having fallen 17.4% from its most recent record close. The blue chip Dow also slipped into correction, ending the week down 14.9% from its most recent record close. The tech heavy NASDAQ composite fared even worse, slumping into the bear market territory with a 22.7% retreat from its most recent record close. And there's probably more selling to happen. We'll see. Nobody seems to be able to predict the future anymore. Investors were hoping that Federal Reserve Chair Jerome Powell would calm nerves at an event on Friday. However, the central bank chief said that the economic impact of tariffs was likely to be larger than expected, adding that the Fed was in no hurry to act on interest rates and would wait and see how events play out. There was a tiny bright spot this week in the form of an unexpectedly strong March non-farm payrolls report. However, most economists said that the jobs report was likely a last hurrah. For the week, the S&P 500 retreated 9.1%, while the Nasdaq slid 10%. The blue chip Dow fell 7.9%, and yeah, panic. Looking ahead, Wall Street has a busy week ahead with key data on inflation and the start of the first quarter earnings season in focus. Still, the spotlight will continue to be dominated by the fallout of U.S. President Donald Trump's imposition of the steepest American tariffs in over a century. The question investors are asking is whether, after a bruising 2-day global rout, markets have bottomed or there is more pain still to come. I would say there's more pain, but who knows? In terms of scheduled events, the March Consumer Price Index report will take center stage on Thursday. Next week, we'll also see several Federal Reserve speakers, and traders will be keen to hear their thoughts on Trump's tariffs. The first quarter earnings season also gets underway with a few major names kicking it off. The number one U.S. carrier, Delta Airlines, will report quarterly results on Wednesday. JP Morgan, the biggest U.S. bank by assets, will announce results on Friday, and so will smaller rival Wells Fargo. BlackRock, one of the world's largest asset managers, will also be on the docket. Jumping into the Bitcoin news, we will start with the Hodler's Digest from Cointelegraph. Let's see here. BitMEX co-founder and former CEO Arthur Hayes says U.S. President Donald Trump's tariffs may rattle the global economy in some ways, but that same disruption could be exactly what Bitcoin needs to rally. Global imbalances will be corrected and the pain papered over with printed money, which is good for BTC. Hayes said in an April 3rd X post. His comments come just a day after it was announced that the Trump administration will hit all countries with a 10% tariff starting April 5th, with some countries facing even larger rates, such as China facing a 34% tariff, the European Union 20%, and Japan 24%. Hayes explained that tariffs positively impact Bitcoin's price for several reasons. One of them, he said, is the weakening of the US dollar index as overseas investors continue to sell off US stocks and bring money home. Elon Musk, SpaceX, has sent a crew of 4 private astronauts on the first manned spaceflight to orbit the Earth's poles, in a mission bankrolled and led by a wealthy crypto investor. Chun Wang, the Chinese-born Maltese entrepreneur who founded the Bitcoin mining pool F2 Pool, paid for and is leading SpaceX's Fram2 mission, which is named after a 19th century Norwegian Arctic exploration ship. Wang and 3 others blasted off from Cape Canaveral, Florida at 1:46 a.m. UTC on April 1st on a 3 to 5 day orbit that will be the first human space mission to fly over the North and the South Poles. Former Binance CEO Changpeng CZ Zhao will begin advising the Kyrgyz Republic on blockchain and crypto-related regulation and tech after signing a memorandum of understanding with the country's foreign investment agency. I officially and unofficially advise a few governments on their crypto regulatory frameworks and blockchain solutions for government efficiency, expanding blockchain to more than trading, the crypto entrepreneur said in an April 3rd X post, adding that he finds this work extremely meaningful. His comments came in response to an earlier X post from Kyrgyzstan President Sadir Japarov, announcing that Kyrgyzstan's National Investment Agency had signed a memorandum with CZ to provide technical expertise and consulting services for the Central Asian country. Online battle royale shooter Fortnite has just added a new secret Dilbits server mine location to its latest map update, prompting a small spike in an otherwise obscure meme coin. Videos on social media show a new Dilbit server farm location in the game, made to look like a cryptocurrency mining operation. There are other locations on the map where it has appeared. Solana-based meme coin Dilbits, inspired by the Fortnite in-game currency, spiked 200% to 0.0005 on April 4th, as the crypto community also took notice of the latest addition. Fortnite introduced Dilbits as an in-game currency in February as a jest toward crypto. Oh, when will the shitcoiners ever learn? 2 Democratic lawmakers in the U.S. Senate and House of Representatives have called on Acting Securities and Exchange Commission Chair Mark Ueda to preserve information regarding World Liberty Financial, the crypto firm backed by President Donald Trump's family. In an April 2nd letter, Senator Elizabeth Warren and Representative Maxine Waters, ranking members of the Senate Banking Committee and House Financial Services Committee, respectively, asked Ueda to provide information to Congress based on Trump's ties to World Liberty Financial. The 2 lawmakers suggested the SEC may be being influenced by the firm, and this conflict of interest may be interfering with its mission to protect investors and maintain fair and orderly markets. Analysts say that Bitcoin price could drop to $70,000 within the next 10 days, as one BTC pricing model suggests that the US-led trade war could upend investors' risk asset sentiment. In his latest X Analysis Network economist Timothy Peterson warned that Bitcoin may return to its 2021 era all-time high. Hmm. Well, that seems to be happening today so far, but we'll see where Bitcoin decides to go. It's probably going to be lower, and then it'll be higher. Bitcoin price expectations continue to deteriorate as the impact of higher than expected US tariffs hit home. For Peterson, the outlook now includes an uncomfortable trip down memory lane. Bitcoin to 70K in 10 days, he queried. Authorities in the U.S. state of Massachusetts continue targeting unlawful cryptocurrency market practices, with a local court fining crypto financial services firm CLS Global. A federal court in Boston on April 2nd sentenced CLS Global on criminal charges related to fraudulent manipulation of crypto trading volume, according to an announcement from the Massachusetts U.S. Attorney's Office. In addition to a $428,059 fine, the court prohibited CLS Global from offering services in the U.S. for a probationary period of 3 years. European Union regulators are reportedly mulling a $1 billion fine against Elon Musk's X, taking into account revenue from his other ventures, including Tesla and SpaceX, according to the New York Times. EU regulators allege that X has violated the Digital Services Act and will use a section of the act to calculate a fine based on revenue that includes other companies Musk controls, according to an April 3rd report by the newspaper, which cited for people with knowledge of the plan under the Digital Services Act, which came into law in October 2022 to police social media companies and prevent illegal and harmful activities online. Companies can be fined up to 6% of global revenue for violations. Cybersecurity firm Kaspersky says it has uncovered thousands of counterfeit Android smartphones sold online with pre-installed malware designed to steal crypto and other sensitive data. Uh-oh. The Android devices are sold at reduced prices, Kaspersky said in an April 1st statement, but are riddled with a version of the Triada Trojan that affects every process and gives the attackers almost unlimited control over the device. Dmitry Kalinin, a cybersecurity expert at Kaspersky, said that once the Trojan grants the attackers access to devices, they can steal crypto by replacing wallet addresses. And that wraps up the Hodler's Digest. Moving on, we have a CoinDesk Weekly Recap. Bitcoin holds steady amid market turmoil. Well, like I said, that didn't last long, but we enjoyed it while we did. It was a dreadful week for the stock market, with the S&P 500 falling more than 6% over the last 5 days. That didn't help Bitcoin, but the original cryptocurrency fared better than the wider market, rising over 1% in the same period. The Nasdaq had one of its largest falls in 25 years Thursday, but Bitcoin held relatively steady. CoinDesk James Van Straten reported, even if now it's nowhere near the highs above 100,000 that we saw at the beginning of the year. The big question for Bitcoin amid market uncertainty is whether it's seen as a risk asset to be sold off in a storm or a safe haven akin to gold, which until the last 24 hours at least was doing well relative to the market. The impact of tariffs on crypto is much debated by researchers. Meanwhile, the digital assets industry prepared for better days ahead. Circle, the issuer of the second largest stablecoin, USDC, officially filed for an IPO. An important U.S. House committee advanced its stablecoin bill with significant Democrat support. Fidelity Investments, a major brokerage firm, announced plans to offer an IRA, allowing investors direct access to crypto in their retirement accounts. Helen Braun had the news. Advisors are increasingly willing to promote crypto products to their clients, surveys show. In other news, corporate Bitcoin buyers like Strategy, Metaplanet, Mara, and Tether kept stockpiling Bitcoin, taking advantage of today's prices. Ethereum developers locked in May 7th for their next upgrade, named Pectra. Margot Nykirk reported. Ripple reported big demand for its new stablecoin RLUSD. Chris Sander reported. Don't really care about that. Then in regulatory news, Paul Atkins neared confirmation for SEC chair, and longtime DC crypto advocate stepped down from heading the Blockchain Association to work for a new Solana-focused group. Much of the news followed a pattern we've seen for the last few weeks: sagging markets and quiet industry growth aided by a regulatory thaw. Given the tumultuous macroeconomic environment, it's going to be fascinating to see how crypto continues to fare. Moving on. This is for bitcoinnews.com. This was, let's see, when was this posted? Yesterday. Gotta love it. Mad Money's Jim Cramer warns of 1987 style market crash amid tariff driven volatility. So, of course, you always want to do the opposite of whatever he says. Jim Cramer, the volatile host of CNBC's Mad Money, has sparked alarm with his prediction of a market crash reminiscent of 1987's Black Monday, when the Dow Jones Industrial Average plummeted 22% in a single day. His warnings follow a brutal 2 day sell off on April 3rd and 4th, 2025, which saw the Dow plunge 2,231 points amid fears that Trump's tariffs on imports could exacerbate inflation and stall economic growth. Cramer, a former hedge fund manager turned media personality, attributed the recent downturn to President Trump's refusal to scale back tariffs targeting foreign goods, particularly Mexican beer and auto parts. He singled out companies like Constellation Brands, the distributor of Grupo Modelo's Corona beer, as vulnerable to tariff driven cost spikes, noting the last thing it needs is tariffs. The dog played my child trust until we finally jettisoned it at a big loss. Cramer also criticized Trump's inaction, arguing that without intervention, markets could face a man made obliteration akin to Black Monday. Cramer said, "We could be in for the rips of a quick bear market following the COVID 2020 model. We could be in for a 2000 style bear market where tech was laid to waste for a very long time, or it might be the big kahuna, the one in October 1987. The host's dire outlook has reignited debate over his stock picking track record. Critics often label Cramer a contrarian indicator, citing data showing that betting against his recommendations via strategies like the inverse Cramer ETF has historically outperformed the market. The SJIM ETF launched in 2023 reportedly delivered a 48% return in 2024 by shorting Cramer's picks. Analysts argue his tendency to hype overvalued media driven stocks creates short term volatility ripe for exploration. Cramer's Black Monday comparison references the October 19th, 1987 crash triggered by program trading, overvaluation, and global contagion. While swift central bank action averted a depression, the crash exposed risks of automated trading and herd mentality factors Cramer claims are resurfacing. It feels like one of those pre crash moments in October 87, he said, recalling his decision to sell holdings before the collapse. Well, I guess he's not always wrong. Despite his polarizing reputation, Cramer urged investors to avoid panic, noting that post 1987 markets rebounded within a year. He advised focusing on recession resistant sectors like auto parts and discounted financial stocks, though he cautioned in a recession, you don't want to own anything connected to autos. So, inverse Cramer movement, amplified by social media trackers like at Cramer Tracker, showcases deepening skepticism toward his advice, yet Cramer's latest warnings highlight tangible risks. Trump's tariffs have already disrupted supply chains, while sticky inflation complicates the Federal Reserve's ability to cut rates. Whether Cramer's prediction proves prescient or merely hyperbolic, his commentary reflects broader anxieties over policy driven market instability, a lesson Black Monday taught all too well. Next up, also from Bitcoin.com news. This was posted and well, it was updated today. Crypto chill. Bitcoin dips 2.6% under 81K ahead of Wall Street's next move. On April 6th, which is today, Bitcoin's valuation declined, landing at 80,538 per unit after sliding from its recent high of 83,668. The premier digital asset saw its 24-hour trade volume contract to $14.16 billion, a 17% reduction. The day's most active trading unfolded on platforms such as Binance, Bybit, OKX, BitGet, and Crypto.com in that order. Actually, it's down even more now as we're speaking here. Curiously, while the majority of exchanges clustered around relatively the same price, South Korea's Upbit stood apart, listing Bitcoin at 82,915, reflecting close to a 2% premium today and suggesting complex regional dynamics. Meanwhile, CryptoQuant.com's Coinbase Premium Index recorded a decline, pointing to diminished U.S. trading activity and lighter buy-side pressure. As of Sunday, the San Francisco-based exchange ranks sixth in trade volume, trailing just behind Crypto.com. Losses from Sunday's trading trimmed the broader crypto economy by 2.45%, bringing the total valuation to $2.59 trillion. Bitcoin maintains a commanding 62% share of that total, with Ethereum holding 8%. In derivative markets, liquidations reached 252.79 million on Sunday, of which 207 million were long positions. ETH long liquidations contributed roughly 72 million to that figure. And yes, the traders are getting wrecked. Bitcoin's price trajectory continues to move in close step with global liquidity shifts, considered by some to be the purest gauge of macroeconomic and monetary policy forces. With Wall Street poised to reopen tomorrow, Bitcoin's latest turn may not bode well for traditional finance, but it offers a revealing pulse check on broader market sentiment. At press time at 1:45 p.m. Eastern Time, Bitcoin is exchanging hands for $80,613 per coin. And next up, this is from Cointelegraph. And this was posted on April 5th, yesterday. And again, I'm just trying to go through the news here and find where the signal is. There's obviously a lot of opinions, bullish and bearish, but I think what we're probably going to see is Bitcoin's going to have to drop a little more. Probably Monday is going to be really ugly for the stock market. And then, the printing will start, and Bitcoin and gold will take off probably. And, who knows? We may see new all-time highs by the end of the year, but Bitcoin's just going to do what it's going to do. Just stay humble, stack sats. Bitcoin traders prepare for rally to 100K as decoupling and gold leads BTC trend takes shape. Bitcoin price, which I think currently is at 79,347, it looks like, could head back toward the $100,000 level quicker than investors expected if the early signs of its decoupling from the US stock market and gold continue. Bitcoin has shrugged off the market jitters caused by US President Donald Trump's April 2nd global tariff announcement. While Bitcoin initially dropped over 3% to around 82,500, it eventually rebounded by roughly 4.5% to cross 84.7. In contrast, the S&P 500 plunged 10.65% this week, and gold, after hitting a record 31.67 on April 3rd, has slipped 4.8%. The fresh divergence is fueling the gold leads Bitcoin narrative, taking cues from price trends from late 2018 through mid 2019 to predict a strong price recovery toward 100,000. Gold began a steady ascent, gaining nearly 15% by mid 2019, while Bitcoin remained largely flat. Bitcoin's breakout followed shortly after, rallying over 170% in early 2019 and then surging another 344% by late 2020. A reclaim of 100K would imply a handoff from gold to Bitcoin, said market analyst Macroscope, adding, as in previous cycles, this would open the door to a new period of huge outperformance by Bitcoin over gold and other assets. The outlook aligned with Alpine Fox founder Mike Alfred, who shared an analysis from March 14th wherein he anticipated Bitcoin to grow 10 times or more than gold based on previous instances. Bitcoin may be eyeing a drop towards 65,000 based on a bearish fractal playing out on the Bitcoin to gold ratio. The BTC XAU ratio is flashing a familiar pattern that traders last saw in 2021. The breakdown followed a second major support test in the 50-2-week exponential moving average. BTC XAU is now repeating this fractal and once again testing the red 50 EMA as support. In the previous cycle, Bitcoin consolidated around the same EMA level before breaking decisively lower, eventually finding support at the 200 2-week EMA, the blue wave. If history repeats, BTC XAU could be on track for a deeper correction, especially if macro conditions worsen. Interestingly, these breakdown cycles have coincided with the drop in Bitcoin's value in dollar terms, as shown below. And there's a little chart in the article. Should the fractal repeat, Bitcoin's initial downside target could be its 52W EMA around the $65,000 level, with additional sell-off suggesting declines below 20,000, aligning with the 202W EMA. A bounce from BTC XAU's 52W EMA, on the other hand, may invalidate the bearish fractal. From a fundamental perspective, Bitcoin's price outlook appears skewed to the downside. Investors are concerned that President Donald Trump's global tariff war could spiral into a full-blown trade war and trigger a U.S. recession. Risk assets like Bitcoin tend to underperform during economic contractions, further dampening sentiment. On April 4th, Federal Reserve Chair Jerome Powell pushed back against expectations for near-term interest rate cuts. Powell warned that inflation progress remains uneven, signaling a prolonged high-rate environment that may add more pressure to Bitcoin's upside momentum. Nonetheless, most bond traders see three consecutive rate cuts until the Fed's September meeting, according to CME data. Next up, this is from CoinDesk. This article was published, well, looks like it was updated today. Bitcoin's price stability at risk from potential basis trade blowup that catalyzed the COVID crash. Bitcoin's recent stability amid NASDAQ turmoil driven by tariffs has generated excitement among market participants regarding the cryptocurrency's potential as a haven asset. But hold my beer. Still, the bulls might want to keep an eye on the bond market, where dynamics that characterized the COVID crash of March 2020 may be emerging. NASDAQ, Wall Street's tech-heavy index known to be positively correlated to Bitcoin, has dropped 11% since President Donald Trump on Wednesday announced reciprocal tariffs on 180 nations, escalating trade tensions and drawing retaliatory levies from China. Other U.S. indices and global markets have also taken a beating alongside sharp losses in the risk currencies like the Australian dollar and a pullback in gold. Bitcoin has largely remained stable, continuing to trade above 80,000, and its resilience is being viewed as a sign of its evolution into a macro hedge. But as we've said, don't get carried away, people. The S&P 500 is down roughly 5% this week as investors brace for trade-driven earnings headwinds. Bitcoin, meanwhile, has shown impressive resilience. David Hernandez, crypto investment specialist at 21 Shares, told CoinDesk in an email after briefly dipping below 82,000, it rebounded quickly, reinforcing its status as a macro hedge at times of macroeconomic stress. Its relative strength could continue to attract institutional inflows if broad market volatility persists. The perception of stability could quickly transform into a self-fulfilling prophecy, solidifying BTC's position as a haven asset for years to come, as Macroscope noted on X. However, sharp downside volatility in the short term cannot be ruled out, especially as the Treasury market basis trade faces risks due to heightened turbulence in bond prices. The basis trade involves highly leveraged hedge funds reportedly operating at leverage ratios of 50 to 1, exploiting minor price discrepancies between Treasury futures and securities. This trade blew up in mid-March 2020 as coronavirus threatened to derail the global economy, leading to a dash for cash that saw investors sell almost every asset for dollar liquidity. On March 12, 2020, BTC fell by nearly 40%. When market volatility spikes, as it is now, it unearths highly leveraged carry trades vulnerable to big market moves. The blowup in the U.S. Treasury market in March 2020, which disrupted basis carry trades, is a recent example. Risk of leveraged carry trade blowups is high. Robin Brooks, managing director and chief economist at the International Institute of Finance, said on X. The risk is real because the size of the basis trade as of end was $1 trillion. Holy cow. Double the tally in March 2020. The positioning is such that a 1 basis point move in treasury yields, which move opposite to prices, would lead to a $600 million shift in the value of the bets, according to Zero Hedge. So increased volatility in the Treasury yields could cause a COVID-like blowup, leading to a widespread selling of all assets, including Bitcoin, to obtain cash. On Friday, the MOVE index, which represents the options-based implied or expected 30-day volatility in the U.S. Treasury market, jumped 12% to 125.7, the highest since November 4th, according to data source TradingView. The gravity of the situation underscored by a recent Brookings Institution paper, and there's a link here in the article, which, by the way, I'll post all these articles in the show notes, which advises the Federal Reserve to consider targeted interventions in the U.S. Treasury market, specifically supporting hedge funds engaged in basis trading during times of severe market stress. That sounds like a bailout. Let's see how things unfold in the week ahead. And by the way, bailouts, bullish for Bitcoin. Next up from Bitcoin.com news. This was posted yesterday. Robert Kiyosaki says, crash has landed, recession here, depression next. Buy Bitcoin. Haven't heard from him in a while, so let's see what Robert's got to say. He's been, of course, predicting a market crash, always, I think, or at least for the last few years. Robert Kiyosaki, author of the best-selling book Rich Dad, Poor Dad, has once again sounded the alarm on the global economy, this time declaring that the financial collapse he had long warned about is no longer a future threat, but a present reality. Kiyosaki shared on social media platform on April 4th, I warned the biggest stock market crash in history was going to wipe out the financial security of millions of investors, especially my generation, the baby boomers. The famous author continued, that stock market crash arrived today. We are definitely in a recession and more than likely a depression. The acclaimed author explained why he's been urgently cautioning baby boomers in particular, writing, why was I warning boomers? Because boomers are out of time. Or as pilots say, they are running out of runway. They do not have the time to invest for the long term in stocks, bonds, mutual funds, or ETFs. Turning to solutions, Kiyosaki offered his long-standing advice. What can a person do? As I've been suggesting for years, I suggest looking at non-Wall Street assets. He stressed for many years I've suggested saving real gold, real silver, and today Bitcoin. Backing his recommendation, the renowned financial educator wrote, why? Because after this paper market crash wipes out millions of fake paper assets, odds are the Fed and Treasury will turn the printing presses on full speed, printing trillions in fake money, which becomes even more fake, and real money, gold, silver, and Bitcoin, go up in value. He concluded, if you still have some runway left, you may want to save real money, which are gold, silver, and Bitcoin. Kiyosaki has consistently warned about the collapse of fiat currencies, the decline of the US dollar, and the failure of traditional financial systems. He views gold, silver, and Bitcoin as real money and essential lifeboats in what he believes is a rapidly sinking economic ship. In December last year, Kiyosaki predicted a historic crash, advising boomers to sell homes, stocks, and bonds before it's too late. All right, next up, this is from thebitcoinist.com. This article was, looks like it was updated a couple hours ago. Article entitled US Macro Setup to Favor New Bitcoin All-Time High in the Long Run, according to an analyst. In the last 2 months, Bitcoin price has plunged by over 23% in a prolonged market correction. Significant portions of this decline have been attributed to a series of new U.S. tariffs announced in February, March, and most recently, April. Despite the short-term bearish effects of this macroeconomic development on the crypto market, popular crypto analyst Miles Deutscher theorizes that Bitcoin could substantially benefit from the long-term effects of these policy decisions. In a recent X post, Deutscher states that Bitcoin is on course for a new all-time high despite current market uncertainty. The analyst explains that while recent trade and economic policy changes by the administration of US President Donald Trump may be exerting a negative market effect, the ensuing sequence of events from these decisions can prove bullish. Firstly, Deutscher states that the recent economic decisions by the US government show intentions to induce short term pain that could weaken the dollar and interest rates, which should be beneficial for Bitcoin and other crypto assets. However, the new import tariffs are likely going to discourage the purchase of US Treasury bills, forcing a reliance on domestic buyers, which triggers liquidity tightening. As Bitcoin is sensitive to liquidity, the contraction of global liquidity will cause further price falls as investors move their funds to safer assets. Eventually, the crypto market is expected to bottom out pricing in recession fears. By the time an official recession is announced, the market could be stable and anticipate an economic response by the Federal Reserve. At this junction, the US Apex Bank is likely to announce a rate cut, clearing the way for quantitative easing. However, while the QE may not occur until 2026, Bitcoin will experience a dollar liquidity boost from other economic tools, including repurchase agreements, bank term funding program, and treasury bill purchases. Following this development, Bitcoin is expected to embark on an upward trajectory. The top quality altcoins will potentially follow the market leader, while other tokens with little to no utility shrink. Once Bitcoin nears or hits a peak price, the alt season will kick in. Deutscher explains it is currently difficult to predict the crypto market and US policies in the short term, i.e., 1 to 12 weeks. However, his forecast is likely to roll out in the coming months, placing Bitcoin in a strong position for a new all time high between Q3 2025 and Q1 2026. At the time of writing, Bitcoin was trading at 83,313, following a 0.9% gain in the past week. However, the asset's daily trading volume is down by 68.68% and is valued at $14.25 billion. So a lot of different perspectives on what's happening, and I think from what I'm gathering from all this is Bitcoin lower, stocks a lot lower, and then they're going to have to do something to stop the meltdown, and then big rally after that. So stay humble, stack sats, take advantage of the low prices, sell your chairs. Next up, and lastly, a little bit of, I guess we'll call this hopium. Mainstream media, Forbes article here. U.S. Treasury Secretary declares Bitcoin a quote store value to rival gold as its price beats Trump's crashing stock market. Bitcoin and crypto prices have been rocked by U.S. President Donald Trump's barrage of tariffs, with the Federal Reserve poised to blow up the Bitcoin price. The Bitcoin price dropped sharply after China sparked fears of a crisis scenario, but has bounced back, breaking its correlation with the stock market. Like I said, that was probably true on Friday, not true on Sunday night. Now, as the chief executive of BlackRock calls Bitcoin potentially a safer bet than the US dollar, Treasury Secretary Scott Bessent has declared Bitcoin an emerging store of value, comparing it to gold. Bitcoin is becoming a store of value. Gold has historically been a store of value, Bessent told podcaster Tucker Carlson, adding that there are a lot of different stores of value over time. Bessent's comments come as stock markets around the world fall sharply in the aftermath of Trump's so-called Liberation Day of trade tariffs that saw the U.S. implement a global baseline import tax of 10% and much higher rates for goods from dozens of countries. As risk assets continue to sell off, investors may increasingly rotate into traditional hedges like bonds and gold, or into Bitcoin, which has shown notable resilience relative to equities in recent days. David Hernandez, crypto investment specialist at Bitcoin and crypto investment company 21 Shares, said via email. Gold, a traditional safe haven asset, is up around 15% so far this year as traders and central banks buy it to hedge against economic and geopolitical uncertainties. Bitcoin's price action this week has been a true testament to its investment case as an emerging store of value and potential for uncorrelated returns, Hernandez said. The U.S. stock market has plummeted by around 10% since Trump followed through with his well telegraphed global tariff regime that was more aggressive than traders had anticipated. Trump himself shared a social media post with caption reading, "Trump is purposely crashing the market." The Bitcoin price has, however, climbed over the course of the week, breaking its recent correlation with the stock market, specifically the tech-heavy Nasdaq and the so-called Mag 7 stocks that include Apple, uh, Alphabet, Amazon, Microsoft, Netflix, Nvidia, and Tesla. And as I said before, earlier, Bitcoin says, hold my beer. All right, that wraps up the news. I did want to talk about this week's featured post on the Bitcoin Fortress Substack. The article is entitled Holding Your Own, a non-technical guide to Bitcoin custody and key management. So please check it out. And I also wanted to mention the look ahead for upcoming articles. So the uh, first one I have coming up on Monday is kind of a weird one. The Berenstain Bears discover a causal trade with hyperstitional AI entities from future timelines. I've had a lot of fun with that one. And then we have Bitcoin for the win. Hal Finney, Bitcoin's quiet hero. Bitcoin's price resilience amid the tariff turmoil. So, some thoughts on that. How to make the most of life and enjoy the journey. And getting a Bitcoin backed loan in California, which I did recently to help pay some taxes that I owed. And so that was interesting. And with that, we will wrap up the show. Thanks for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can also follow my Substack at bitcoinfortress.substack.com. And you can follow me on Nostr. My EPUB is in the show notes. And stay humble and stack sats. Get some popcorn and enjoy the show. It's going to be crazy. And with that, I will talk to y'all next week. Bye bye.